Now, government officials from around the world are meeting in Rome to talk food, and it's not about the pasta. They're concerned there could be another food crisis like 2 years ago. The UN says the volatility in the international food markets is likely to continue. Well, to get more insight into what this means, I'm joined now by Sudakshina Unnikrishnan. She's a soft commodities analyst at Barclays Capital. Thank you very much for speaking to us. So, do you agree that we are likely to see much more volatility in commodities markets in the weeks and months ahead?
No, I think certainly. I don't think the worst in terms of volatility is behind us. I don't really expect a repeat of what happened in 2007, 2008. There were some pretty specific factors that caused the level of high prices across agricultural markets. Oil prices were trading close to all-time highs then. You had floods in the Midwest. You had 2 successive lower wheat harvests. So this time around, it's quite different. But I think certainly in terms of expecting higher volatility in agricultural markets in years ahead, I think that is likely to be a feature across these markets.
And why is this the case? Are actual stockpiles slipping? Is there a physical shortage in soft commodities like wheat and sugar?
Yeah, no, absolutely. The inventory situation has been absolutely crucial. We had big levels of buffer stocks across most agricultural markets through the 80s, through the 90s. And very much into the mid of the 2000 decade onwards, we started seeing countries like India and China in particular having an increased amount of grain needed to be met by imports. And I think just the specter of having markets of this sort of magnitude turning into net importers is likely to keep markets volatile. Stockpiles are a lot lower, both as in key producing and consuming countries as well as globally, and weather patterns have become a lot more erratic. So I think that makes for a pretty volatile mix for markets.
And you mentioned that the food crisis a couple of years ago, food aid groups were really blaming speculators for that crisis, saying that they're responsible for driving up the price of food. What do you make of that?
No, I mean, certainly there has been a lot of criticism in agricultural markets coming from the level of investment that's been taking place there, as well as things like biofuels, the whole diversion of land to be used instead of food to produce fuel. But I think in the case of speculators, I think it's quite, it wouldn't really be fundamentally justified to pinpoint the gains that we saw in agricultural markets in 07, 08 to just speculative activity. Because as I mentioned earlier, we've seen a low level of stockpiles. These fell to critically low levels in 07, 08. Wheat stocks globally were their lowest level in 3 decades then. Corn stocks the lowest in 25 years. So I think you had a very strong fundamental justification for prices to have risen by that sort of level. There was a lot of panic buying in the market, and I think certainly it wouldn't really be fair on the back of the data we have at hand to argue that fundamental activity was not responsible, instead speculators were.
So how do you make money in soft commodities right now?
Well, I mean, the issue about soft commodities really has been that a lot of them have just presented a tactical opportunity because you don't have the high level of misalignment between demand and supply for long periods as you would in industrial commodity markets. This does mean that opportunities tend to be a lot more short-termist in nature. So I think at current levels, we would expect the rally across cotton prices as well as parts of the grains complex, corn in particular, to ensue over coming months. But at current levels, it would be hard to go in there and establish a long position at current levels. I think it would hold a long position.
From what you're saying, these sort of erratic periods of supply and demand are likely to stay around for a while now.
Absolutely, absolutely. Structurally, there's a very strong case to argue that, especially on the demand side of the market, we're seeing a lot of very big fundamental changes, big increase in terms of Chinese imports. I mean, just looking into the data for this year so far, Chinese imports in the last 2 months are over 1,000% from what they were at year-ago levels for corn. So certainly, the increasing demand that we've seen from emerging markets, erratic weather issues, as well as export bans, governmental intervention, and these sort of curbs have made for very volatile markets and therefore pretty good investment opportunities.
Sudakshina Unnikrishnan from Barclays Capital, thanks very much.